Hello, ladies and gentlemen. My name is Avi Mash. I'm here with my co-host, Anthony Ohayon.
How's
Uh,
it
we,
going, everyone?
we are here
Uh,
live for the first episode ever of Pounding the Table, the podcast. Here we're bringing you some interesting news, some strategy around investing. It's a very hot topic, obviously, nowadays. We got a lot of new investors coming in. I think there should be some light. Can't have a bunch of Portnoys out there, picking Scrabble pieces out. So we want to give you a little bit more knowledge than many of the folks that are out there here online. My co-host is the brains here behind this. So Anthony, want to introduce yourself? Want to probably start this off, just kind of introducing yourself. I know you started to grow very quickly here on Twitter. You're a young man who's crushing it. But besides that, tell us a little bit about yourself. Where you're from, and probably more importantly, kind of your story that pathed into really getting into the stock market.
awesome. Yeah, I'm really happy to finally get this going. A lot of people have been asking for this, so I'm happy to finally give the people what they want. Yeah, I mean, I've been investing pretty much my entire life. My parents were doing it when I remember just being like 6 or 7 years old. I would go downstairs and sometimes see my parents like hitting up the E-Trade app, buying a bunch of shares of Visa. They like to be, they're a little bit more on the conservative side. Yeah, but when I was 14, 15, I decided to start trying it on my own. So I got a job as a busboy food runner at an Italian restaurant called La Trattoria Oceanside. And I was working there like 40 hours a week. And after 2 years, I got out with like 5 or 6 grand. Threw it all into an E-Trade account. I did a demo for about a week. I remember buying like some random penny stocks, and I was like, all right, I got it. I can go put the real money in. And it was like all my savings. And I had just bought myself my first car at 1999 GMC Envoy. And I was like, well, the rest of this is just, it's just fun money. Let's do something with it. Yeah, it definitely wasn't easy when I first started. I've probably blown up about 4 accounts in the whole time I started. I got into penny stocks when they were first hot, like the weed penny stocks. Those were not that great for me. It hit huge games, and then you catch the other side of the pump and dump, and then you're the one that catches the dump. So it's not really a great time. I did the same thing with options myself. Like I just thought that for some reason I could start trading options. My cross country coach and track coach, Terrence White, one of my favorite people in the world. He introduced me to options, and I didn't think that. I was always like, stocks are the way to go. Why would you do anything else with stocks? They only go up.
Right, of course.
Not really. Yeah. But yeah.
Yeah, no, I think that just kind of thinking about that a little bit more, right? Like a lot of folks, and probably most of your followers, know what options trading, is more or less. But if you were to sum it up to someone new, since there are so many new investors, right, thinking of getting these, as you mentioned, stonks, as we are coming to know, only go up, right? And, probably since you've been investing since 2008, they've been going up significantly, every year, more or less. What is the difference between, a stock, an equity, let's say, and an option, right? From a very simple, I guess, level.
Yeah, I'll spoon feed it to the E-Trade baby.
Exactly.
I like to say. Yeah, I mean, like if you're playing stocks, you're just buying a piece of a company. So, let's say Apple is worth $1 million and the shares are $10, and you buy one share, so you own a small percent, for $10 of that company. And you're doing options, it's like, okay, well, I don't have $10, so maybe I'll put $1 in and I'll get the buying power that one share would have. So let's say that the stock goes over a certain price that it's kind of like a bet. You're saying, all right, well, I think, Apple's at $350 now, just for numbers sake, because it's skyrocketing. Let's say I think it's going to go to 360, and so I'll buy like a 355. It's a call. So a call means you're going to the upside. You also have puts, and that's going to the downside. So you make a bet to the upside. And you're gonna have to pay for that bet. It's like you go to the sports place and you're paying for a bet there, and you got odds in a line there. So sometimes the line's worse or better for you. So let's say it's $1 for that bet to say it's going to go to 355 by Friday or next Friday or a couple months from now, whatever it is. The price will change depending on that. But let's say it's $1 and it goes to 360, instead of having to put in that $350 times 100 shares, which is what an option is for 100 shares. you put in $100, and if it goes to 360, you get 500 out. So you get the same buying power as if you put in 35 grand, but without the 35 grand risk. Problem is though, that goes to zero if you're wrong, as any bet does. If you had the share, you could just hold on to it and hope it comes back later.
Yeah, so there's that idea of like deterioration, of time, and maybe that's not the right word, but I always thought of it. I was a degenerate sports gambler, right? And so I always thought of options, almost thinking of that as like a live bet, right? If the
it honestly is exactly that.
Yeah, if a team's up 24-0 in the fourth quarter, you're going to take kind of a Hail Mary or kind of a long shot. There's not a lot of time left to get there. And so most likely that's going to go down to zero, right? And so that's kind of like the degenerate in me that kind of brought that up in thinking about that. We'll touch on that, a little bit more as we go through the podcast. But, tapping again kind of in those early days, right? You mentioned that you started when you were young. You went to Duke University, which is definitely no slouch. Were you trading a lot during school? Like how did it kind of come from, fun, nice to have to like, this is now your career, right? What made that switch? Like talk about that, the early days. I'm sure you had a kind of a lot of doubters or haters, people talking shit that did not believe in you, right?
You'd be surprised how many people are mean to a 16-year-old just trying to learn the market. I've been trading. I think I've barely missed any days since I was like 16. Like I think I took a 6-month period off, and still I was checking the market. I think I was just doing crypto instead. So I really haven't been out of the market since I was like 15. I'm 23 now, so I haven't been out of the market for like the last 6 or 7 years. But in those early days, it was definitely hard. Like I didn't have many people to teach me besides my coach, and then Sam Perick, Smarter Trader, really mentored me a lot about options, taught me the majority of what I know today. But still, like I remember being on Twitter, asking people, like asking questions, just being a part of like the financial Twitter community, and just getting really just like trying to ask questions, trying to learn. And start giving my own opinions, because I don't really think you can start really doing anything well until you can talk about it from your own standpoint. And especially when I was doing that, a lot of the people would come out. Like I had some people hate on me for my Tesla prediction, which came true in 2020, went to 1,000. So I was like calling that at 100, and I was like, in 5 years, it was like my first big play. I was thinking, oh wow, Tesla is like this is going to be a big game changer. And I remember getting absolutely wrecked for that all over the internet. But I honestly just stuck with it. Like I couldn't turn it off. I was obsessed with the markets. I was just, if I wasn't doing options, I was doing stocks. If I wasn't doing stocks, I was doing cryptocurrency, and like honestly everything in between. So it's just been a huge part of my life. And I think when I was about like 10 or 12, I remember seeing my parents lose a ton of money in the 2008 crash. And I was like, man, like I really want to do this one day, to have the people who maybe don't have as much experience or time, or even just care to be in the markets. Like I want to be able to help those kind of people. And I'm not talking like the $250,000 minimum accredited investors in my fund, like not those people. Like I really wanted to help the people who can just give 10, 50, whatever they can, and maybe try to change their life.
Folks like me,
Exactly.
Which kind of, it's funny, like, this whole advent of the Twitter stockbroker per se, right? And I guess that that's really how we met. It's through Sam originally, right? I had been following Sam and saw you tweeting, and then he like would tweet back to you, and he doesn't really tweet back and forth with a lot of folks. And so I saw him. I actually had the opportunity. I was down in Dallas for a work trip, and I saw him. I was like, hey, I saw you're in Texas. Lo and behold, I'm here. You're not in Dallas by chance. And then fortunately for me, he was in Dallas, and I was able to actually spend some time. Went out to like a fancy little dinner and such. But it's really just funny that you're being able to meet people through Twitter. You happened to be in New York. We grabbed a few beers and started talking. And it's here we are 3-4 years later now, talking every day. We're chatting every day about stocks, and so it's funny. I also wanted to bring up. You mentioned Tesla, right? To me, that was the biggest like haters, right? Like you had bought. I think that's when I kind of validated you. I saw you, buying your first Tesla. I think you were like 19. Would you say that was kind of like your first like moment?
Yeah, no, without a doubt, man. Like that was like when I realized, I was like, okay, well, like I can do this, and I know that I mean, like it wasn't just like people on Twitter that were hating. Like I remember showing my resume to some of my professors, and like I posted like my trade gains and my percents, and they're like, oh, well, everyone makes money when the market's going up.
Right.
All you do is buy calls. And I was like, well, then why are like hedge funds shutting at an alarming rate? And why are they underperforming and people are pissed at their fees? So, I mean, having that I even posted on my Facebook, which was like a huge, big move for me to do, just because if I was wrong, I would have looked like a complete idiot.
Right.
I like took my entire trading account, genuinely like the entirety of my trading account. And I bought like Tesla options a couple months out when the Model 3 was coming out. And I said, look, like this is going to be a game changer. The stock's going to run like 50%. And it did. And I took some contracts from like $6 or $7 to 50 plus. And then I bought my Model 3. So that was like if I had anything that could give me proof that I could do this, it was that. And then from then on, I haven't let up. And I mean, now I wake up at like 7 because I go to sleep at 4 and I watch futures.
I think you're bringing up a good point, right? In terms of like the mindset, it's a big risk. A lot of people think this is gambling. There's a lot of different ways to gamble, obviously. And I think, what you shared with me is there's a lot that goes behind, not only just, what's happening with the news, which we'll touch on, of course, later, but like thinking of just like the mindset when it comes to trading. Like, a lot of people may trade scared. There's that old saying of like scared money doesn't make money, right? And so like, how would you say, like, when you wake up at 4 a.m., right? Or so when you wake up at 7 and start kind of looking, like, what's that trading mindset you have every single day?
Yeah.
Like, what's your approach in the morning? Do you, do push-ups? Do you drink a glass of water? Whatever that may be. How do you kind of start your day, and what does that look like kind of on a daily basis?
Yeah, it's surprising. Like a lot of people ask that, and I would say the biggest thing is your day doesn't start on the day that you're trading, right? Like you go into the day prepared from the day before. Right. Like I understand, trust me, like one thing I know more than almost anyone is, that anything can happen in the markets. Like news can come in a second, right? Like we saw this yesterday, like anything can happen. Markets can drop 100 points in 10 seconds off of a headline. But if you're, I'm always long something, right? Like I run a fund. So my fund's usually always in something. So I'm not waiting till the next day to see, hey, like what's going to happen to my positions. Like I'm going to go to bed that night comfortable because I know that, hey, worst case scenario, market goes to 0. I'm hedged. Like I'm ready to go. I'm going to be fine. But when I do wake up, I usually don't go to bed until 4 because I like to check the quotes at 4 a.m. It's like a lesson I learned from Sam as well. It's like it shows you a really good deal on there. But I also I'm watching those futures because it's surprising. You learn a lot about order flow. Like you learn a lot about seeing what the market really wants to do, and it's a huge difference. Like overnight, it's way less volume. Like than normal cash sessions. So I'm always watching that. But when I wake up and I see certain stocks rallying, certain stocks like flat or, certain stocks down, it kind of paints a picture to me of what's going on in the market. Right. So it's like if all the stocks that have gotten beaten down, like the travel stocks, the airlines and everything, if those are exploding and I see tech is just kind of stalling and I see, everything else in between that, it's just like kind of doing average, then I know that they're rotating money into those value stocks. So that's going to be the play of the day. But I'm already in value stocks. So all I'm going to do that day is just kind of arrange my portfolio, maybe sell out of a little bit because of the huge spike, and then go back into the stuff that hasn't run yet. Because a big thing I learned is that the market kind of likes to do a very, very cyclical thing. It goes between all these baskets. So it'll go between value, it'll go to growth, it'll go to big tech, and it'll come back in a circle kind of like that. It's just a matter of when. So I like to have all those different areas, those different baskets in my basket, just for when the time is right.
Yeah, no, I mean, you've done it. We talk all the time, and it blows my mind sometimes how your ability to kind of hedge against your own plays and such. It's kind of like, this is a genuine question too that I often think about, is like how much stock do you essentially put into some of these futures, right? We saw it last night, I think it was maybe 2 days ago, everything with COVID, this timing, I never know what day it is or what time it is essentially. Yeah. But like, another thing is right, like these retail investors, and I won't classify you, I'll classify myself as one right now, it's this David and Goliath mentality, right? So like you were mentioning to me the other day, I found it like very fascinating about what's going on with the pension funds. So like, I think, share with some of the folks what's happening here kind of at the end of the month, or how often this happens, where they do need to, I'll let you speak on this, but where they kind of need to balance their portfolios, and how that affects, some folks that are retail investors that may not think about these types of things.
Yeah. I mean, like, so at the end of the quarter is always a really, I mean, what happened last week with quad witching, which is just like, I don't even want to talk about it. It's just too in depth here, but it was a very, very complicated
not for the first podcast. Yeah.
Not for the first podcast. We'll go
That's
into it
professional.
Later. Yeah. But, I mean, at the end of every quarter, there's always stuff happening. I mean, even for me, myself, like the last 2 weeks, I've been basically wasting money hedging just to make sure that I end up in a really, really good place at the end of the quarter. Like, I'm not trying to like have the market dives 5-10% and take me down. So I'm just going to, spend money to hedge myself. But all these pension funds, these mutual funds, like they have to balance at the end of certain periods of time. And like these pension funds, let's say that, you have an allocation in your paperwork when you first invest in this fund, and it says, I'm going to be in 60% stocks and 40% bonds. And then the market explodes in the last month or last 3 months or so, because, the Fed backstopped everything, but bonds are still trading way subpar. So your allocation is going to be maybe 75% stocks, 25% bonds. So you got to sell 15% stocks and buy 15% bonds to be on your allocation. So, I mean, that's a huge problem usually. But the thing is, right now, I'm pretty sure that the Fed, there's just so much liquidity in the market. I mean, there's less now, I think, obviously, than there was before, because when we pumped, it was huge and all pretty much at once. And it does take time for liquidity to hit the markets, though. But I don't think the selling is going to be as like aggressive as everyone's saying. You get the zero hedges saying there was 1 trillion to sell. It's just, if that would have happened, the market would have been down 100, 200 points in a day in the last 10 minutes. Like, that's not real. So a lot of people are also creating these narratives in the financial community because, a lot of the people, I think, are either short and they can't get out because they're short from 200, 300 points ago, or they're one of the big hedge funds, most of the hedge funds, who sat on the sidelines and there's like 5 trillion sitting on the sidelines that they didn't invest because they didn't believe in a rally. So everyone's trying to get into those stocks that have performed super well. It's called window dressing, right? So you like make your book look really, really pretty, so your investors see it on the month and the quarterly statement.
Yeah. No, I mean, I think that's fascinating to me, especially, we always kind of talk about these retail that we've been investors, and you see all these people coming on now from like RobinHood, right? And people listening again to, Dave Portnoy, who's picking literally pieces from the Scrabble, just kind of as a half. And then, he's got money to blow. He's got his own ulterior motives and whatnot. But like, how do you kind of, for some of these newer investors, and we were joking about this today, in our chat about how, there's literally a website that says how to, go against and kind of fade essentially what these RobinHood folks are doing.
Yeah.
Like, is that real? Is it like, are people that,
I'm
unsure?
Telling you, it's definitely a real thing, right? So like I saw this like graphic the other day, showing that I think Citadel paid $100 million last quarter for Robinhood's order flow. So it's just like every retail investor's trades. And like Robinhood's different from other brokerages. I mean, you're getting every single trade just like averaged out, and you're getting when they buy, when they sell, what they're buying, what they're selling, like to the minute, right? Like you're getting just tons of pieces of data. And I mean, they're paying $100 million for it. So if they see like, all these guys are huge in a stock, right? Like, and like maybe the stock goes bankrupt. So on Robinhood, you can't buy it. You can only sell it. So everyone's dumping it. So, and they know that, for instance, this is probably going to go bankrupt, or that there's going to be a big short in the stock soon. They'll just load up the short before anyone even knows it. And then all those Robinhood people are left holding the bag. So, I mean, I don't think data access is necessarily a bad thing, but it's always, it's not what you have. It's kind of how you use it. And those people they're definitely using it for their own gains. They're not using it to try to help make Robinhood money, try to make, the retail investor extra cash. No way.
Of course, of course. No, I mean, it's funny to think about because I've been on Robinhood, and when I switched over to TD Ameritrade, I just started, maybe it was timing, but I just think I started taking it more seriously, and I think just the margins you're getting, and this is not a bash on Robinhood, but I think, for a lot of these new folks, I think something big that happened in investing was, Robinhood actually really broke through for a lot of folks, and they kind of set that line of like the free trades, and then everyone else was kind of forced to follow. They have obviously better, systems in place to really help with that.
Of course, yeah.
So, anyways, but yeah, so kind of thinking about some of the other things in the news. One thing that really stood out, I have this bolded out, as one of the questions, and a lot of these questions, by the way, thanks for all of Anthony's Twitter followers that are now, coming over to follow me as well. So appreciate the, almost famousness that I got going on here. But you're talking about how they've locked the rates in here, at 0.1% until the end of 2022.
Oh yeah.
What the hell does that mean for the average investor, and why are you so bullish going through the next couple of years?
I mean, so if you look at the chart for the markets, just in general, like any market, pick anyone you want. Even look at the RUT, which is the Russell 2000, hugely underperforming now because of the coronavirus. But if you look at it between October, when the Fed started adding more to the balance sheet, because what was happening was for like the last 2 years, we were starting to increase rates and we were starting to taper off the balance sheet, which means we're trying to take assets off the Fed's balance sheet. And the market could not break over 2960 on the S&P 500. It couldn't get through 3,000 for more than a couple of days. As soon as they started adding more to their balance sheet, so they were buying, corporate ETFs, they were buying, they were buying bonds, they were buying a bunch of different things in the market. We'll go into that later. And then they were starting to drop those rates as this was all happening. That's the most bullish possible thing you can get, because the reason why we didn't break out for like the last 2 years and we were just range bound essentially was because we were taking stuff off the balance sheet. You're selling into the bond market, right? Like you're selling into the ETF market. So you're not letting the market, I mean, granted, this is like artificial like stimulation into the markets, of course, but you're not letting the market continue that growth. And if you're raising rates, then people can go and say, hey, well, I don't really like the markets right now. It's a bit risky, but the 10-year is giving me 2.5%, whatever. Let me go just put my money in bonds, treasury bonds backed by the US, super safe, guaranteed return. It's great. But now they drop these rates so low. And what are you going to buy for yield? You're going to buy stocks. You're going to buy, high yield corporate bonds, which are trading super down because people think all these companies are going to go bankrupt. And then not only that, but their balance sheet went from October to February, went from 3.6 to about 4.4 trillion. So they didn't add too much. And now it's over 7.3, 7.5 trillion. So that amount, if you compare to, we ran 600 points off of less than $1 trillion. You add 3 trillion, market should be 5,000. I mean, obviously granted, like this is just like in a perfect world. Like if nothing were wrong, if the economy was back to normal, unemployment was, as low as it was before and employment was full, we would be at 5,000 with that kind of stimulus. So that's why I'm so bullish. I mean, like for the next 2 years, you can't find yield in safe bonds. You have to invest in some type of risky asset class. So you're going to be buying something that helps prop up the market. And all that stimulus is going to find its way into the market at some point. I don't know when, I don't know how, but it will get into the market at some point. It's just a matter of time. And that's also why, look at this rally. Like the unemployment, we got 40 million unemployed, as one of our friends likes to say every day. Right. The economy is not looking fantastic. You've got a bunch of industries 70% lower in their sales and revenue and all that, but we're still higher than when the Fed started dropping rates and started adding to their balance sheet in October. So this is insane, right? Like this, imagine when the economy gets back to normal.
You're a super bear. I believe in positivity. I'm always an optimist, as much as I can. I was a bear, and I'm ashamed to say it, for a while. And you did get me to kind of switch over and start thinking more data and really kind of, the stock market's not what's happening today. It's what is happening in the future. So you see stocks like Zoom that are just dominating. Obviously, COVID just propelled that thing skyrocket.
Best quarter beat of a company in history. Insane.
And so let's talk about Zoom for a second. Like, what are your thoughts on kind of, one of the folks on Twitter, and we'll start to call you guys out by name just to give you guys some notoriety here. But in terms of some of the stocks, one of the questions, like, pick 3 to 5 sectors that you think are going to be the future. You have a great list that you sent to me, of some of the core stocks you're looking at. One that kind of stood out to me was SPG, right? I don't think people are going to be going to the malls. I still want to be sold on that. Sell me on why you think a stock like Simon Property Group is going to be well.
Here's my logic for these kind of things, right? Like, people who have a lot of money, right? Like the big managers, the hedge funds, the pensions, the mutual funds, they're usually chasing yield. Mm-hmm. So you see all these cloud, the SaaS sector, software as a service sector, crazy valuations now. And I'm not a valuation guy in the slightest, right? Like, not at all. But there's only so much those things can go exponential, right? Like, you see Fastly, one of my favorites, and I was in from 22, it's 82 today, right? So that, I knew that was going to happen. I didn't think it would happen in 2 weeks, but I knew it would happen, right? So I think what's going to happen is like something like SPG, right? So Simon Property Group, they control, or they own the properties for most of the big malls in America. I don't think malls are going away, right? Like, I'm a big believer that retail will die a slow death, a way faster death now because of the coronavirus. But I still think that there's always going to be a human innate urge to go out and buy stuff. Maybe you're not buying, you're not going to the mall to buy tools for, you're building a shed in your backyard or whatever. But, you want to go try on some clothes, and you go to the mall. Like, you want to go get some ice cream, maybe some sushi in like a nice, like, Asian fusion restaurant, you go to the mall. So I think that, and also, I mean, like, if you look at where it was, right, it was like trading at 170. This thing is at 69 today. Like I think there's still a huge upside, right? So it's not that I love the company. I like the opportunity that it has. It's the same thing as like Booking, right? Like, I mean, granted, they may buy TripAdvisor, which I was hearing about today. That'd be interesting. And they own Open Table, and they're kind of expanding in that. And they're not just based in the US, but I think a lot of those beaten down names are something to definitely look at. So if I had to pick one big sector, is all these stocks that are severely beaten down, like the airlines, the hotel trusts, like Starwood, SPG, Simon Property Group, Booking.com.
I was about to say, how can you not say Booking?
Booking, my biggest winner.
That's your winner, man.
My biggest winner for honestly my whole life. Like, that trade, changed the fund. That changed my life. Like, that's a huge percentage of.
You were the first one to say, like, everyone's like, who the hell would go on cruises? And you showed me this article that cruises are, I don't remember the percentage, but it was like insane, like 200% up from the year on year.
Yeah. So it was like they were trying to start cruising in August, and they were saying that like August bookings are up 600%. But that data for me was like, it's hard, you can't really take that for what it is. Cause right, like, let's say that they went down 90%. So they're up 600%. They're still 40% down from where they were. Right. But the piece of data that really changed my mind was bookings in 2021. Like, obviously I know about the discounts, I know about the deals, and like, you can cancel and all this and that. But like in stocks, it's always just about your interest. It's about your number of subscribers. It's about your revenue potential. That's what it's about, right? So in 2021, they were saying that cruise bookings were up 41% from 2019. So when everything was perfect and dandelions were in the fields, cruises were up 41% in 2021. So, and only 11% of those were rebookings, right? So you had at least a 33% change of growth on top of 100% normal amount of bookings. So for me, like, cruises are like, nobody has to go on a cruise, right?
Right. It's a luxury.
It's like the most leisurely thing you could be possibly doing. It's a week of your time when you're unemployed and you're still getting 144% from 100% of your bookings, right? So that was, for me, that was like, that's it. And I read that on April 11th or April 12th. And from then I was a Super Bowl. Like, it didn't matter to me. Like, everything else was just media noise. That was pretty much everything I needed to see.
Why do you like airlines? So, and I say this as, I work in software sales. I'm traveling a lot for work. If companies get comfortable, and I heard this, on Crowd, which is one of my favorite, stocks going on, on their quarterly earnings report, they were talking about, hey, it's kind of the new normal. Like, if companies are okay with taking demos over the phone or over Zoom, which we're on right now, like how do you kind of see the value? I think I forget the exact percent, but a high percentage of those airline, are business travel. And if people are okay, and you also take a look at, those companies, hey, that's a lot of money in T&E that we're saving over time, right? You don't need to pay for all these flights, and that's great for companies. So that could, be great for other companies, but airlines specifically, like where do you see the value there, just genuinely?
Yeah, no, I mean, and I've had a lot of disagreements with people about this. But I mean, I've been in UAL since 24, right? And it was at 36 today, it was at 50, trimmed a little bit, but I got back in more. But I think that airlines are, like, I don't think malls are going to be better in 10 years than they are today, unless they go, they do some revolutionary change in what they're doing, just in general. I don't know what it could be, that's not my field, but
sure.
They could do something, like, who knows, you could transform that into something that everyone wants to go to. I think the thing with airlines is people are going to still travel, right? I know that a big percentage of it is business travel, but could you imagine if 33% of people wanted to go on a cruise? How many people want to go to, like, Bali? How many people want to go to, like, Australia once this is all over? Like, I'm dying to go somewhere. Totally. And I'm sure you are too, right? So
totally.
I think it's not really just about, of course, people look 5, 10, whatever years down the road, but that's far. That's way too far. People should stop looking that far, unless you're buying something for long-term, right? Like, for me, it's not a long-term play. Like, I won't be holding UAL. Okay. I won't be holding UAL in 2 years. But do I think that at 36, it should go back to 60 to 70 once this is over? Easily.
Got it. So it's more of a value thing, which that makes sense. I don't think they are where they're at. Who knows? Yeah. I think eventually, I'm an optimist. I think life will go back to normal. We've seen, this happen. I haven't seen it happen in my lifetime, and neither of my parents. But you look in history, and these types of things have happened. The technology, the testing, the whole world's against this thing. We're gonna figure it out. Like, I'm very confident with that. I agree with airlines more than SPG. We'll see. I'm in retail. I hear about all these brands that are, people are going to e-commerce. Now my parents who never bought anything online are now starting to buy online, right? Now there's millions of extra people that are kind of created this behavior of now, hey, I could buy something online. So who knows? I do think they will pivot.
So let me touch on that for a second too. Sure. Shopify is, well, it was my second largest position, and now it's my number one largest position. And I was in and out of it along, like, between 280 and 350, whatever. And then it dropped a ton during COVID, the COVID crash. And I loaded the boat at 350, 348.5 to be exact. And I rode that thing. I rode it all the way to 930 today. Like, I haven't gotten out of it. So me playing SPG is me playing the other side of that coin. Right. Like, I've already made 200, almost 300% on shop. So for me to only be in shop while it had this insane run, Black Friday level sales every single day because of COVID-19. And trust me, like, I believe that that's going to stay higher than it was before this. Like, those sales, that traffic on, like, not on retail will continue, and retail will continue to die. But if I'm wrong at all, then I want to be in the other play. I want to have at least some exposure to the other side of the coin, especially, like, if it goes back to where it was, I'm going to get a 300% gain. So I think it's a lot harder for shop to go to 3,000. Okay, maybe not, because I think shop is going to 5,000. But in the amount of time, in the amount of time, I think it's harder for shop to go to 3,000 if the market gets all the way better. Because the only way the market gets all the way better is if these junk stocks, I'm doing quotes on my fingers right now.
Right.
If those come back, right? Like, the market's at 3120, 3130, and you have Apple, Amazon, Microsoft, all these things are over their highs, right? And that's 24% of the S&P, probably 28% now. I don't even know what it is, but it's definitely higher than 23%, which it was. That's like half the NASDAQ and those big 5 tech companies. You can't just keep, they can keep going up, of course, but, like, you can't run the markets to where it was previously unless those junk stocks come back. So, I mean, it would take a lot longer, and I'm going to bet that those value stocks, the SPGs, the UALs, the bookings of the world, those come back. I think they do. And I'm going to be happy when I get a 10 to 70 hit on my calls, when maybe it's a year, maybe it's 2 years. I have 2 years on my calls. I have Jan 2022s. 100 strike at like $9. So we'll see.
Yeah, no, I've learned to stop making fun of you because there's been plenty of times I've tried, and I'm saying this just purely off emotion, right? Like I like what I think about the market, and then you use data and you like clown me because it ends up flying, right? So how do you like think like thinking about like kind of the emotional trader, right? Like it's innate. People are naturally gonna.
I'm an emotional trader too sometimes.
Everyone is, right? But like, how do you're an optimist. I'm an optimist, and I love life. We want, you want to see things go
Peak
well.
life.
Exactly, peak life. So hey, maybe that's a good quick transition before I get into some of these final questions here. Peak life. Explain that to me. What is peak life? I know what it means, but for the viewers, we had a few beers and I was just like, this kid, he gets it. He totally understands. What is peak life? What's the embodiment mean to you while you brought that up?
It really is just not. It's not just a name. It's definitely not just a fun. I mean, like for me, it is a way of life. Like I have a tattoo, a peak life tattoo. Like right, like it's for me, it's every single day. You have one life, right? Like, and every single day, what do you want to be doing with that day? And every day turns into every week, and every week turns into every month, and every month turns into your whole life. So you want to be living the best life you possibly can, whether that means putting your money where you're going to get the biggest bang for your buck, like in great growth stocks versus crap. Or, if you don't like your job, quit that, go travel and drive down Costa Rica. It really doesn't matter. Do whatever you want to do. And I mean, peak life is just about living that optimal life for yourself, whatever it is. Like if you want to go be a painter, be the best possibly be.
I agree. I mean, there's a famous saying, if you like what you do at work, then work is not work. And like, I've always done that. When I was 25, I quit my job in Chicago. I went traveling and I knew that, at this time, I'm never going to be able to do this again. Well, maybe I will, but I'm not going to be able to do it when I'm 25. Right. And so like, exactly. I would definitely encourage people to go out, like you mentioned, there's that joke of YOLO, everything YOLO this, YOLO that. But like there is some truth to that. Like you Absolutely. Do only live once. And so you do want to, really take advantage of it. Probably should have saved that question to the end to end on optimism. But with all this optimism, what makes you go bearish, right? I think that's the question, right?
I heck of a transition.
Right? I'm always bragging to my friends. I'm like, you guys, you don't realize how good this kid is. Like he's a and everyone, comes back and says, hey, it's easy to make money. And like your first thing you mentioned, where it's easy to make money and throw darts at the board and anything can go up. Not only, one, I guess the first question is like, what's the indicators to that would kind of create a bearish? Because you do puts occasionally, right?
I do puts every week to manage my positions, but not directionally usually.
But overarching, I'd say like more so like where you're kind of, you'll always have hedges on both directions, right? But like more or less, like when would you shift from, this full on the full on bull to kind of, going bearish more? Like what, is there an indicator? Is there something in the news that would happen?
For me, it's 100% news related. Like if this China deal is completely off, like I won't go completely bearish, but I'll start being bearish. But I'll tell you, like the biggest thing for me, and I wait for this, if this ever happens, I'll sell everything in 6 seconds. But if the Fed does anything to take its foot off the gas, I mean, literally anything, like I'm not talking like, I've read the Zero Hedge article, which I already knew about, but I read it because I wanted to see what everyone else was thinking. Like, oh, the Fed dropped some stuff off his balance sheet. Well, yeah, it was quad witch. So they were taking off, maybe bonds or ETFs, whatever that were expiring at that time. So they had to roll those off because they literally expired. They couldn't hold them anymore. But if the Fed starts raising rates, if the Fed does anything like that, or if they stop providing liquidity before unemployment's back to full, before the economy, like it has to be 100% normal. Like everything in the economy, like we have to go back to like 3.4% unemployment. We have to go back to, same GDP. Everything has to be like when it was the best economy in the world in 2019, whatever, all that. Mm-hmm. If they do anything against what they're doing now, like if they stop even a little bit, right? Like I'm done. I'm out. I'll go bearish because that's it. Like liquidity is everything in the market. So they stop pumping us. They stop doing the liquidity. Like we're not going up. It's not like you can see that clearly. Like history has shown you that we didn't break 3,000 for 2 years because they started tapering. They started raising rates. If they do anything like that again, especially in the climate right now, I will go full bear. I'll short the world and make a lot of money.
Yeah, well, that's the beauty of trading, right? You can make money both ways, and you don't always need to, you can do it week by week or month by month and so forth. So, that's definitely valuable. Cool. We've been talking a lot. This is our first podcast. This is pretty cool that we finally got it going. I know we've been talking about
Yeah,
this
I'm
for a while.
excited.
The people have been waiting. I guess a good way to end is, there's a lot of these new investors. That's kind of been a theme here. What would you say to, someone that, picks up, the same thing kind of happened with Bitcoin where like random people started talking about Bitcoin, and that's kind of the indicator to kind of get out of that. Now we see a lot of people, and partially me being again degenerate sports gambler, I no longer can do that. So you've seen a lot of people that have used to bet on sports kind of come in the market. A lot of new people. There's a lot of new things to get into the market, right? What would your like advice? You failed early, right? What would your advice be? I think for some of these folks that are
Yeah.
new first year or two, kind of into trading and getting going here.
I got the biggest piece of advice, which I don't think I'll ever change. This is being the number one thing you should pay attention is make sure you can trade tomorrow.
Mm-hmm.
And I don't mean like make sure you wake up with your alarm clock, make sure you have a nice breakfast. I mean like make sure your account doesn't go to zero. Because if you're at zero, then you're starting back from square one. You're not even like worse than square one because you probably put money in there from working before. So you don't have to be a hero. You don't have to be buying your entire account. Definitely don't do anything you don't understand. I mean, like that's just like a recipe for disaster.
Mm-hmm.
Like I've woken up before to my account being at like negative 1.5 million, and it wasn't even like actually a negative 1.5 million. It was just like I was selling put spreads, and somehow like I got assigned, so it didn't cover it till the morning or till the next Monday, and like I was freaking out. Yeah, so you don't want that to happen. You don't want to be in a position where you're freaking out and in a really, really bad place. So you can always go small, and don't start trading options unless you truly understand it. And even when you do understand it, you don't understand it. So start like you can practice, right? Like there's paper trading accounts for a reason, and you're not going to do the same thing with real money as you do with fake money. Like no. Yeah. So make sure you can trade tomorrow.
Totally. No, I think that's a good point. I mean, and I'm case study number one. My first 2 weeks of options trading, I took $5,000 and $30,000 2 weeks, and I was like, I was like, guys, I'm quitting tomorrow. Like I'm the best stock trader in the world. And of course, 2 weeks later, not only did I lose that $30,000 gain, I also lost, and I brought it all down to zero. And that's when I came to you, and I only advise to start with just regular stock trading. Probably trade a paper account just to kind of understand how options definitely work before you actually start putting money, and then buy one or two contracts. I even that I have more money now to play with. I think that I still buy sometimes one or two, and still put stop limits on just to make sure that I can capture some of those gains and stuff. So no, I think that's definitely good advice. But yeah, cool. So I think we're good. I mean, I think we don't want to blow it all here on the first episode.
Yeah, we got a lot more to talk about. We've got tons and tons of content. We didn't even get through like I would say 10% of the questions. So we got another 10 coming at least. So
yeah, well, I think that the idea here is like week by week. We didn't do it this Sunday because of Father's Day, and we didn't think that made sense. But every Sunday we're gonna try to do this and keep it consistent on Sundays for everyone. I'm doing this to learn personally from Tony. I'm doing it for the fans, for other folks like me. I think this is a really cool opportunity. There's a lot of young traders. There's a lot of, veterans still, and everyone has something to learn. Right. And so, I think we could do this, every week, and it's going to be a really cool opportunity for, beginners to, experts to start to really understand how to, take the news, which is what you talked about originally. It's like, what's kind of the most important. And that changes day to day, and that changes week to week.
Absolutely.
And so, I think it'll be a cool thing that we can get started.
We want to also say that like we're trying to make this something that's not going to put you to sleep, right? You can see our very our lax and kind of jokingly fun mentality here. I've listened to so many podcasts that I turn off within 30 seconds. It's just too professional, and I don't like any of that stuff. Like you're not going to get the real content out of it unless you're talking like real people, right? So this is what we're trying to aim 100%. To do here. So I mean, if you like this, please subscribe to whatever platform you decide to drop this on. Hopefully Spotify signs us like Joe Rogan and Kim Kardashian.
Oh, we're gonna double his salary, 200 million for this podcast.
Easy.
Exactly.
So we'll be back next week with another episode of Pound the Table. Thank you guys for listening.
Baby. All right, guys. See you next week.
Have a great trading week, everybody.